It is the morning of September 12th, and Bitcoin's run upwards to 120K or 130K has begun. Without further ado, let's dive into the charts. Now, as of right now, Bitcoin is trying to find support on the top of this channel here, which, a number of weeks ago, it had failed to do. But I think we got it in the bag this time, ladies and gentlemen, because the breakout of this wedge has a breakout target itself of $120,000. And I believe that the top line here is going to hold as support because of what we're seeing on short-term timeframes. So zooming in here on the 8-hour time frame, yes, we're not holding the 200 simple moving average right now, but I believe we will hold this line because the Moxie indicator is showing that we are in ever-growing bullish strength on the 8-hour time frame. So yeah, come down, touch this line, hell, maybe even come down quickly, dip below it, touch the 12 exponential moving average in the worst case scenario. But I do think this line itself holds. And then you have the blast off that the breaking of this pattern has begun, which will have another effect, which is the breaking of this channel. I don't have it here, but this is a gigantic bull flag pattern. The breakout target of this is $130,000, which is why I say the breakout target range for Bitcoin right now is between $120,000 to $130,000. But when we get to 120K, I think the risk really starts to elevate if you're still in the market and you haven't taken a single bit of profit. And it has to do with two things, first of which is on the Bitcoin liquidity heat map. You can see here where this bright section is up to $120,000. This is where the market, centralized exchanges, make a lot of money from liquidations. They're financially incentivized to drive the market up to $120,000. Past that point, there's not a whole lot of financial incentive. In fact, if you zoom out further to the 3-month time frame, you can see there are some paydays up here, but the biggest payday is actually lower down. So once we hit this big batch of liquidity here, there's some incentive to go up higher. Sure, yes, there could be a payday for that 130K run up, but the biggest payday is lower down. So that signals to me, once we get through this, the market might be financially incentivized to say, hey, this is some good money, but you want to know where the great money to make is? Let's dive the market lower. The other thing to keep in mind is that, it's going to take us probably a few days. Today's Friday. It's going to take a few days into next week for us to get to 120K. And we have a buy the rumor, sell the news event happening on the 17th next week, which is when rate cuts will be announced. So that is a very likely time where risk is also going to be super high if you are still in the market and haven't taken a lick of profit, to maybe see that market dive back down to about $104,000, where that other key liquidation zone is. That's the biggest payday for market makers. So do be aware of that possibility potentially preventing us from getting to 130K. Be safe and manage your risk.